Hello guys, welcome to the Trading Parrot. Since yesterday we've been talking about getting to 67.2 and that level was clearly a good support. What I wasn't expecting is that we were going to be for 8 consecutive candles just bouncing off that support and not going anywhere. In today's video I want to talk about a particular pattern that is forming in here that tends to have a very typical outcome. I want to talk about the targets of that outcome, and regardless of that potential short-term bearishness, I also want to bring 2 questions I received on social network from 2 people in the comments that made me really bullish once again. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. And yes guys, yesterday once again we made it to 300 likes on the video from the morning. The video in the afternoon made it to 266 likes, which is not bad. I would really appreciate if you can hit the like before you start watching this video. That really helps. And from today I really want to continue being very consistent in pushing everyday videos about altcoins as well. I really enjoy doing TA on altcoins. They represent a bigger challenge in my opinion. I want you to stay informed with altcoins that are running very hot, and trying to find what is the best timing to enter on them. But the only way that we can battle against the YouTube algorithm at the moment, which is currently punishing every single video I put out about altcoins, showing it to a very small number of people, is if you can help me. And the way you can help me is to go every time I push out a video about altcoins, hitting the like, watching the full video until the very end, leaving some comments, sharing with people, and summary, engaging more with the video. If you can do that and the altcoin videos start getting more views without punishing the channel, I'm definitely going to be committed to put a lot more videos about altcoins. Let's get into the content. This is the 4-hour time frame, and as you can see, there is a flat support here at 67.2, and there seems to be a descending resistance forming a descending triangle, which is some sort of consolidation pattern that tends to break down. It's a bearish pattern that calls for continuation. Rarely you might see a breakout to the upside from this pattern. If we look at the RSI, again on the 4-hour, I've been looking for some bottoming formation. Unfortunately, we don't have it yet. But if we were to form some sort of bottoming formation in here with a neck around 48 RSI, that could easily push the price to an RSI of around 53. And if we did that, we will have a breakout. Just a local breakout because it's still below the global resistance, but that might be all we need to get into a 62 RSI hitting the global resistance. So we have 53 as a first target if we were to complete that pattern and see the breakout, and then we have 62. 53 will take us to a very humble target of 67.9. I will call that the target of a dead cat bounce because price could just get in there and then still dump. So very careful with that outcome too. But if it survives the bearish forecast coming from probabilities of breakouts from those patterns, that could take us then to a more substantial 68.8. But since the pattern has a bearish bias, we need to be looking also for levels of support in case we see a breakdown, which typically, if it's gonna happen, it's gonna be when I'm sleeping, of course. Remember that we have the global support on the 4-hour time frame located at 41. That has been the case throughout this period in here, and that 41 is still holding us very nicely, as you can see with this brown line in there, but I wouldn't count on it holding for very long. I think we are due for something moving very soon. On the scalping chart, we have 4 areas of liquidity that I wanna emphasize. Number 1, 2, and 3 are areas of liquidity coming from shorts that have been adding into their position with the recent price action going on in the sideways movement in here. The area of 4 is probably the highest level of leverage coming from longs that are also entering, getting impatient with the boring price action, which is totally understandable. And when looking at the delta, you can see that we have entered now in the territory of the red. I made sure that you were aware about this. I published this roughly 7 hours ago when it started happening. I do this multiple times a day to keep you updated on Telegram, Instagram, and Twitter. If you're not following me on at least one of those, you're missing out on time-sensitive information. If you want to follow one of them, go to the video description down below, TTP Social, and you're gonna find all the social networks, the official ones there. Do never interact with me in private message. If you're talking to me in a private message and I'm offering you anything, that means that it's a scammer and you're about to lose all your money. So never ever PM with me, because I never PM with anybody. Before I go into the daily time frame, where we are also seeing very important price action that we need to recognize, I want to mention those two comments that came in the social network. One was on Twitter and the other one I think in YouTube. One of the comments was saying, I hear that most of the people are just leaving and throwing the towel. Very little people are coming into the crypto space, and the vast majority are just leaving. And the second comment was from someone that was currently short on Bitcoin, saying that if we go any higher, he's just going to add more into his position. As I mentioned in the video in the morning, that is pretty much precisely what we need to hear from these people. In the morning, I made it very clear. The only reason at the moment the price has to go higher is the liquidity that is at the top end, starting from 70k. What is the problem right now? The path to 70k doesn't offer a lot for price action to push higher. The more shorts enter on 2 and 3, they're gonna make it a lot easier. But if contrarian to that, we get too many longs entering right now, the same, they're gonna make it too easy to smash the longs. And that's why we need more shorts entering. And reading in the comments that people are saying, I'm short, there's no one coming into the space. And then seeing that we are very close in terms of social activity of Bitcoin. At the same time, that was happening in 2020 in October. We were at very little low levels of engagement around Bitcoin. And suddenly people started saying, oh, I'm throwing the towel. Bitcoin is just going to go back to 4K. We are in the middle of COVID. Nothing is going to happen. We're going to see a huge recession. And price went all the way from roughly 9K into 65K in just few months. No one was expecting something that big at that time, including myself. So I'm not necessarily saying that we need to have the same rally right now, but from socials and from what people are talking, it's ringing a lot of bells in my head about that time, where I was also thinking maybe I should sell my Bitcoin. Things are going really bad at the moment. Luckily for me, I decided to hold at that point, and then I couldn't believe when I started seeing the gains that you get, not just from Bitcoin, but also from the altcoins I bought at those levels in here in October. Anyways, just some words of motivation potentially. Let's go back to the daily time frame. And one level that I haven't mentioned that is extremely important coming from the volume profile is this red line in here. This is called the point of control that represents in the past 8 months in here the level that has been traded the most, the price, which is currently almost 67k. So seeing the price bouncing there is extremely bullish in my opinion. I'm not saying we cannot break down, but if we were to hold there, it will be really amazing. Why? Because in theory, staying between the point of control and the top of the range defined by the volume profile is extremely bullish. Being below the red line and the next blue line turns things a lot more bearish. So seeing the price bouncing off the point of control, it is a good thing. And I want to go back to the Megaphone pattern. There's something very important. Actually, two things. Number one was mentioned by one of the viewers in today's video in the morning, which is why are we placing the resistance in the Megaphone pattern connecting the highs of the price? There are other people that are connecting the closing prices, which are lower than the highs, of course. And if that's the case, instead of coming back inside the range like it seems we are doing now, or struggling to hold the breakout, things look a lot more bullish. So what is the difference? Let's do the changes just for a moment. We're gonna move the resistance to the closing prices. We're gonna leave all these wicks above the resistance. And if that's the case, what we're seeing today is that the price came just for a retest and it's bouncing off and it's holding very nicely, in which case we should just do this and then continue going higher. And the reason I'm doing it different is not because the other way is wrong. In fact, I already showed you that in the monthly, my choice was to place the trend line like this. It actually looks beautiful. I will print this thing, make a poster and put it in my own bedroom, but maybe I shouldn't. But on the weekly time frame, I wanted to make things a little bit more challenging. This is a more conservative approach if you want. It's a lot easier to just connect the closing prices, see a breakout, and then risk that it turns into a liquidity hunt compared to placing the trend line at the very top and having to achieve that higher price and holding even higher to confirm. But that's just my choice. You're welcome to do it in your own way, of course. Second thing that I wanted to mention about the Megaphone pattern is this level in here at 65.7. Someone in the comments also reminded me this level that is also very important, which by the way, the point of control used to be located there. But thanks to the recent price action, the volume has been dragging this red line moving up. Now it's located at 67, so it has moved 2000 up. And this orange line in here is the previous resistance that we have in here. It will be amazing if we have to come back in the range to hold that orange line and that become the spring for the final push to the upside. So if we were to see the triangle pattern on the 4-hour breaking down, let's also make the 65.5 somewhere in here, which is the same level in here, 65.7 actually. And if we place this target in there, roughly the breakdown could take us there. It is doable. Of course, the most bullish scenario is to respect the point of control at 66.9, just hold there and continue going higher, but you never know. Notice as well that the market cipher divergence, now it's being shown in here with a red dot, same as here, and same as here. A little bit sketchy, but you're not gonna break out from the Megaphone pattern without having any bearish divergence, even on market cipher. So sometimes those divergences really don't help that much. I use them in confluence with distribution from wells, but since today in the morning I already made you aware that the big wick to the upside of the big well explorer reverted back to only 0.69, I think, which still is a breakout. It's obviously something I wouldn't have liked to see, but since it's here and it's now smaller, I take that as something positive. Let's look at the liquidity pools in a higher time frame just to see if there are any significant moves. We have a 64.9, the closest proximity liquidity pool below the price, followed by these chunks in here at 61k that are larger, but nothing is as big as what we have above our heads. That stays the same. One big level that it's currently outstanding in here, you can see that most levels make it to this high, but this one is almost double the other ones. It's located at 68k. Very interesting and sneaky level. That 68 is roughly around here and in confluence with hitting the breakout from the W pattern I talked in the early part of the video. It could be the incentive for the price to grab that potentially before a dead cat bounce. I'm hoping that price makes a move to the upside before we get this bearish cross coming from the MACD. Depending on how low we go, this could close very soon. If we go sideways, it might buy us some additional time for not seeing the bearish cross. And the dollar index is getting very close to our target of $104.3. This is the new target. The previous target was 102.5, but we didn't respect it. The current target consists of this trend line that has multiple touches on the weekly time frame at an RSI of 57. Hopefully that is the top of dollar index, otherwise we're gonna be into some trouble. Liquidity at the top end at 70k remains big. There's been some moves between yesterday and today, 86, 87, now it's 88, so it has increased 1 million. Pretty annoying to see, but it's still there. There is a bunch of charts that I want to show you little by little in the upcoming videos, maybe in the next few days. Some of them I built a long time ago and I was very silly to not continue watching those charts that I made myself. Some of them were built by someone else, but I was supposed to continue watching them and they gave really good entries. Unfortunately, I wasn't aware. I just found them when I was looking into my old layouts from TradingView. I'm just gonna show them one by one to you without going into any detail. Let me know in the comments which one calls more your attention, and I can prioritize those ones to show first. We have the 50 versus the 200 moving average on the daily that is currently about to show a bullish cross. The last one we had was roughly on 29th of October in 2023, a year ago, and then we have a big rally to the upside. Next, we have the number of unique addresses that appear for the first time in a transaction in the native coin in the network. This one is literally calling for the end of the bull market based on newcomers into the Bitcoin network. Maybe it's a consequence of the ETFs. This definitely deserves a video by itself. You can see these 3 red lines in here that flags the end of this bull market, the end of the previous bull market, and right now we have it right here, and I really don't know what to do with this chart. The next one is Cerberus. We use extensively this for at least 2 years in a row, and after having multiple buys in a row, finally we are heading towards the top. This is thanks to this move in the price. It is very important to know what to do once we get a golden cell. Golden cells are phenomenal. We also have the Fibonacci levels that we were using. I think the last time we used it was once we reach 50k. At that point I was saying either we are gonna come back in here or we're gonna go higher in price discovery. We did the second. I think it's worth keeping an eye on this because this helped us massively in all this range in here to trade. PNR filter, the most recent news were these 2 buys that were printed in there. Before it gave us these buys at the bottom of the market, buys before this rally, buys before this rally, all the rallies in the bear market before they started, they were green bubbles. There were also green bubbles in here and before the bull market as well. PNR is fantastic. Fibonacci moving averages, very important chart. It will be really nice if we can cover it in one of the upcoming videos. This chart features the Bollinger Band's width for a full forecast of how high the volatility should reach in this cycle, and we have done only half of the expected volatility. I think this deserves a place in one of the future videos as well. We could also cover these charts, but these are not my creations. The EMA ribbon, what is the current state with this indicator. We can cover the super guppy. I used to cover this indicator a lot, but I lost track, and I think we can make lots of insights from what's going on in here. These 3 signals are not just in the same place as the previous cycle, but in the same months as well. We could also cover the Gaussian channel in the future. Guys, my new partner is Bluffing Exchange. This exchange is fabulous. You don't need KYC. It took me 5 minutes to create 2 separate accounts on Bluffing, and I managed to get me a pretty big bonus of 10,000 based on volume traded. If you use the links in the description, you can get that bonus. You get the cheapest fees to trade, and you are really helping the channel to be able to continue putting not just 2 but 3 videos a day. If you already have an exchange and you still want to support the channel, have a look at all these products. These are my favorite products in crypto. Here's where I find most of the alpha. Lux Algo, High Block Capital. Have a look at material indicators. I don't have to say it. TradingView, my number 1 tool for trading. Trading Different, all of them offering really great discounts on fees and bonuses. Thanks so much for watching. I'll see you in the next one. Bye bye.